The following podcast by Fusion Family Wealth, LLC, Fusion, is intended for general information purposes only. No portion of the podcast serves as the receipt of or as a substitute for personalized investment advice from Fusion or any other investment professional of your choosing. Please see additional important disclosure at the end of this podcast. A copy of Fusion's current written disclosure brochure discussing our advisory services and fees is available upon request or at www.fusionfamilywealth.com.
Welcome to the Crazy Wealthy Podcast with your host, Jonathan Blau. Whether you're just starting out or are an experienced investor, join Jonathan as he seeks to illuminate and demystify the complexities of making consistently rational financial decisions under conditions of uncertainty. He'll chat with professionals from the advice world, entrepreneurs, executives, and more to share fresh perspectives on making sound decisions that maximize your wealth. And now, here's your host.
Thanks for tuning in to another episode of the Crazy Wealthy Podcast. Today, I'm proud to have as our guest a true thought leader in the financial advisory recruiting space, a true pioneer in the space as well, Mindy Diamond, CEO of Diamond Consultants. Good morning, Mindy.
Good morning.
Welcome to the Crazy Wealthy Podcast, and thank you for agreeing to be our guest today. So happy to have you. Been a long and important relationship with you. You helped me figure out how to become an independent registered investment advisor, I guess almost 12 years ago. So thank you.
In my head, I would have said a decade, but you're longer than that.
Well, we just celebrated our anniversary at the firm, so it was easy for me to figure it out.
Yeah, so exciting.
Thank you. So, one of the things that we talked about on the podcast as one of our first episodes was the evolution of wealth management over the last 50 years or so. I don't know how long have you guys as Diamond Consultants been around?
30 years. So I started the business, and actually it's closer to 31 years now. And yeah, it's been a long time. So not quite 50 years, but close.
So you started when you were like 15.
Yeah. Thank you very much.
So in the last few decades, I mean, what I talked about on the podcast, I was talking to Harvey Radler, who's been working with me now for a long time, and he's been in the business over 50 years. We talked about his start in the industry, selling stocks for commissions, and then how it evolved to selling mutual funds with the idea that you have access to centralized management for a very low entry point in terms of how much money you had to invest. And then it went to separately managed accounts because mutual funds were not tax efficient as they were created to serve the pension industry that didn't have to worry about a lot of buying and selling and capital gains. And the trouble with separately managed accounts was that the promise of the managers was they'll consistently outperform some random benchmark like the Standard & Poor's 500, which people learned quickly couldn't be done consistently by anybody. So then it evolved to index funds. And then what we talked about is how no matter how you own your securities, if you didn't behave with them in 2000 to 2002 when the market's down 50%, you sold them instead of keeping them and staying on plan, you failed no matter how you own them, mutual funds, index funds, which is why we went into behavior. So what I'd love to talk about today is in that kind of a context, how you managed to stay a leader in your space through what were some, from my perspective as an advisor now for almost 35 years, very impactful changes that really took the industry, I think, in many cases, in different directions. So, at the end of the day, that to me would be a great follow-up to what I talked about. And that if that's something you're willing to talk about, I'd love to hear.
You got it.
Yeah.
You got it. Bring it on.
All right. So tell me, when you started in the industry, what was it that you were able to add most value with in terms of helping people like me?
Yeah. So I appreciate that question because I was an accountant by background and I hated it. And I went to work for an accounting search firm, an executive search firm that placed accountants, and loved that and was very successful with it. But it was a very transactional sale. It was recruiting an accountant at any level, from the lowest level accounts receivable clerk to a CFO. And it was transactional. It was calling someone like Jonathan at work and saying, hey, I'm working on this hot opportunity. Are you interested? And let me tell you why it's great.
Right.
But when I started this business more than 30 years ago, um, I realized quickly that that transactional approach just didn't feel right to me. I was dealing with an incredibly sophisticated client base, a smart client base, and I had the feeling that they deserve better. And so I instinctively sort of pioneered an approach that took the recruiting field from transactional. Jonathan, I don't know anything about you, but let me sell you on this hot opportunity anyway. To Jonathan, tell me a little bit about yourself. Tell me what's most important to you. Tell me what's working for you, what you love about for you, UBS. Tell me about the things you would replicate if you could. Tell me about the things that aren't working. What frustrates you? And questions like that, getting to know you. And only then did I begin to talk about, well, perhaps there could be an opportunity, or here's another way to think about it, or if there's curiosity, here's what we're hearing and seeing. And that consultative approach was just refreshing at best and like mind blowing to so many of the advisors we were talking to. And it's being consistent with that approach, that consultative, meeting you where you are, treating you the way I would want to be treated, and consistency, no matter what kind of a market it is, no matter whether an advisor sells stocks and bonds or index funds or manages money himself.
Right. Well, that's what's interesting about what you just described is you started off as Harvey did, selling commission products essentially,
Yeah.
and recognizing that wasn't helping the client, and you needed to go on to a consultative approach. But you got there a lot quicker than the industry that I'm in, because in terms of the advice part, because it took us 30 years to get there. Right.
Yeah. Yeah.
So in our space, when we the way I practice is similar to what you just described and how you evolve, in that I recognize that whatever anybody was investing in, whatever was going on inside their portfolio, it couldn't be changed in a way that would help them deal with, for example, today's environment. Whatever they do in their portfolio isn't going to change their ability to succeed or not through today's crisis. And so what I recognize is it was never about the investments. It was about investor behavior. It was about making sure, whether they bought mutual funds or index funds or whatever they were investing in, that they learned how to have the right temperament so that they didn't make the big mistakes with their investments at the wrong times. Same kind of consultative approach in this sense. As you watch now the transition in the industry, the migration from it's been going on now for some time, but I think is accelerating from the brokerage industry into the RIA, registered investment advisory space. What do you see as one was one of the biggest causal factors leading to this migration that we're seeing, and how do you view it in terms of how it might impact what you've been spending more time in your business doing?
Yeah. So I think the word incongruence is the best way to describe it. That what a lot of advisors began to describe to us was an incongruence they were feeling between their goals for how they wanted to serve clients and the mandates that their firms, the big firms, were putting on them. So if I use you as an example, Jonathan, having come from UBS, it's the notion that UBS wants you to cross sell X, Y, and Z. UBS might offer to pay you more if you sell a certain product. UBS doesn't allow you to compensate your team the way you may want to. UBS requires that your team spend a whole lot of time dialed into meetings or filling out certain forms. So there's a level of bureaucracy. And the more advisors feel that incongruence between the freedom and control they want to run their business their way and the mandates that the firm puts on them, the more advisors began to say or wonder, is there a better way? Now, it's a big leap from wondering, is there a better way or is there another way, to actually making that move, because the move from working for a traditional brokerage firm to running your own independent firm is the biggest leap of all. I mean, it's a big enough leap to have an advisor move from UBS to Morgan Stanley, let alone from UBS to fully independent. So the amount of incongruence that an advisor feels has to be pretty great. But it's not enough, as I tell people, just to feel pain, just to feel incongruence or feel frustrated. They also have to want it. And there has to be an equal amount of a pull, if you will, towards something else. So using you or the countless advisors we've moved from the traditional space to independence, these are folks that felt that incongruence. So were willing to open their eyes, be curious, wonder, is there something better? But who had a seed of entrepreneurial DNA. I want to build something. I want to create something that's of me, but also a really strong desire to do it better or differently. And we're willing to go through the pain and hassle of a move in order to get it.
So, Mindy, what I'm going to ask you about is if you're comfortable talking about it, is AI. So,
Yeah.
what I always wonder about now is there's a lot of talk about AI displacing people in any industry, not just our industry, from law to accounting and every industry in between. How do you see AI in terms of maybe what are the opportunities that it might provide for people in our industry who are providing advice, and what are the challenges that people need to be aware of so that they continue to be as relevant as they are in providing advice?
Yeah. So as I see it, there's no substitute for human interaction, for human counsel, human connection, personal relationships, and sound advice. So I don't see AI replacing the need for top advisors. I see it making top advisors better. I see it making them more efficient. I see it helping them to write. I mean, that's a way I've used it in my practice. I've always done a lot of writing and podcasting, as you know. And a lot of times I'll put a query into AI that will make it quicker and more efficient and easier for me to say what I was going to say anyway. So I think it'll make people better and smarter, but make practices more efficient and effective. But I definitely don't think it's going to replace quality advisors.
So, Mindy, the next guest we're going to have on the podcast is going to be Cheryl Penny, because when I decided to go independent, you had introduced me to Dynasty Financial Partners, and I've become very friendly with Cheryl, and he also has a what I think is a story that's interesting to everybody, both from the perspective of the industry and his personal story. And I thought it'd be good to have a follow up with him after you and I had an opportunity to talk. When you're looking at a firm like Dynasty that helps people like me to develop what he called the chassis to build our own independent firm, um, how helpful was that for you, particularly 10 years ago when I did it, as opposed to placing people who didn't want to maybe have an intermediary like that help them and went on their own? I can only imagine how daunting it would have been for me to not have someone like
Right.
Cheryl or his
Right.
firm.
So there are people that we would call, I think Cheryl actually is the one who coined the term rugged individualists. There are people that are the ultimate do-it-yourselfers, the people that plan their own vacations. They would never use a travel agent. They like to do their own research. They like to figure things out for themselves. People that will look to build a house and won't use a contractor. They GC it themselves. Nothing wrong with that. But the vast majority of advisors are focused on being good advisors. They want to spend their time counseling their clients and growing their businesses and doing what they love and doing what they do best. And they don't want to have to figure out how to build a firm. So enter Dynasty that really filled the white space that said, let's take a group of advisors that want to be independent. They're entrepreneurial, but they don't need to do it all on their own. They're very happy to pay us to be the GC, to the easy button, as Dynasty calls it, to get them from here to there. We already know the mistakes that are made. We will avoid them for them. They can be very costly mistakes. And so as a result, Dynasty has empowered a whole generation of advisors like you that want independence and want to build a quality firm, but don't want to go it alone. They need a solid partner, and they're the best in the industry for sure.
Right. I agree. So in closing, one of the things I'd like to ask you is what do you see happening or what are the most important things that you would recommend to young professionals today going into the profession in terms of the skill set that they need, the challenges that they might face, and along with that, you can build your answer in together. Is where do you see the industry going from your perspective, or likely heading over the next 10 years that might be different than what we've seen over the last 10?
Yeah. So, your question about younger advisors or newer advisors is an interesting one because I mentioned that I do a weekly podcast called the Diamond Podcast for Financial Advisors. And in the next couple of weeks, I'm going to be interviewing Dave Mullen, who is the author of The $1 Million Financial Advisor and a bunch of the other books like it. And one of the questions I'm going to ask him is, what do you think is the best training ground for young advisors? Because the big firms always struggle how to get it right. The bottom line is, I think my best advice for young advisors is they need to find a mentor. That mentor can be found at a big firm. It can be found at an independent firm. It can be found at any firm in between. But a mentor that is really vested in that young person's success, that wants to take that young person under their wing. And the most common place we see it is with a family member or someone who's long been part of a team, taking a support person and moving them into an FA role. But having a mentor matters. And in the absence of a really formal, solid training program that gives you all the best practices to tap into, that mentor matters more than anything. And it really matters more these days than perhaps when you joined the industry, Jonathan, where it was easier and more okay to cold call. Cold calling is not in vogue now. So advisors have to be much more creative about how they raise money and source prospects. In terms of where the industry is going, I think that probably the best thing you can say about it is how exciting it is because how much more choice there is than ever before. A top advisor has more choice in terms of how they practice, where they practice, what they access, how they access than ever before. When I started the business, if you were $1 million producer, which in those days was, top of the food chain, if you were at UBS, you went to Morgan Stanley or you stayed put. But the notion of advisor choice, this enormous ecosystem that has been born to support advisors, and the notion that it is as valid to practice at Morgan Stanley, Merrill Lynch, UBS, Wells Fargo, as it is as an independent firm, and that this great democratization has happened where what a UBS advisor can access is the same as what an independent advisor can access, that there are no more barriers to entry, makes it really good for advisors and really good for clients.
Which I see as a practitioner, and what's interesting is what you said about having a mentor. So I'll share a personal story quickly, and I'm sure the person I'm going to mention will be very happy I'm sharing it on the podcast. But about 2 months ago, we hired for the first time in a while a young man who maybe is a couple of years out of college, and I viewed him. I met him serendipitously. He was the son of somebody who my client sees as their dentist. And so I asked my client, my son's looking to get into wealth management, and I said, I'm not really hiring, but I'll talk to them. I'll try and help them. And I saw very important qualities in the person, things that you can't teach, like looking in the eyes and shaking the hands and making sure when you follow up to confirm a meeting with me that you're following up professionally, and there were no mistakes in the written follow up, and things you don't see a lot today in young people. Not saying it doesn't exist, but I think it's different than when I was his age. So I decided to take him on and invest my time as his mentor. And it's only been a few months, but I already see that he reminds me of some of the people we used to hire when I was at Sanford Bernstein at 29 as client advisors, which are associates to people who were the advisors, which I was at 29 at Bernstein. And they all became very successful. So I'm actually practicing what you just described is the most important thing for the young people to do with a new young person coming into the industry. And we're excited about that.
Yeah. And, not to interrupt you, but so not only is it wonderful that you're giving back and giving this young man an enormous advantage and an enormous gift that I hope that he appreciates. I'm sure he does.
Thank you. I think
But
he
it's
does.
yeah, but it's also really good for you. It's a
Yeah.
wonderful way to build bench strength, to build your next generation, and ultimately not just good for you and your clients and the growth of the business, but at the end of the day, when you go to sell this business, it will make your business more valuable because it becomes multi-generational. It's less just reliant on you. So it's good for the industry.
Well, you gave me a good segue to my closing, which I was going to say. I'm always impressed with any clients. I have one in particular that has a very successful family business, and you guys have a successful family business. There's you, there's Lewis as the president, Jason, and Howard as the operating officer, your husband, your two sons. So just tell me briefly how that evolved over the years and how you were able to make it succeed the way you guys have.
Yeah. So I started the business 30 years ago. Howard had a successful law practice, and about 15, maybe he's more of the historian than I am. I want to say 16 or 17 years ago, he joined me as our chief legal counsel and chief operating officer running the business. And I didn't even realize how much I needed something like that until he came on board. About 11 years ago, Lewis, my older son, joined. And about 4 or 5 years ago, my younger son, Jason, joined. I never set out to build this family dynasty or legacy, whatever you want to call it, but it's been the greatest gift for me. And I hope that every one of my family members would say the same. I think what makes it work is that we have shared values. We don't always agree on everything. I'd be lying if I said there weren't challenges or disagreements, but
Of course.
they're productive disagreements. And at the end of the day, it works because we agree on the big things. We agree on the most important things. And that's probably the best piece of advice for anybody in a family business, is that just because your family doesn't necessarily mean you see the world the same way. And you can agree. And, you know, as millennials, my sons see the world very differently than my husband and I do. But at the end of the day, we agree on the most important things. We agree on shared values. We agree on how best to counsel advisors. We agree on doing the right thing always, even if it means we sacrifice personal financial gain. And that is indispensable.
Okay, well, that's great. I see that it works because I watch some of the podcasts and I see the family participating as true owners of the business, and there's nothing that's a substitute for any employee, family or otherwise, who takes ownership. That's one of the things I look for.
You're
So,
here. You bet.
So Mindy, thank you so much for being a guest. I really enjoyed discussing everything with you, and again, thank you for helping me out the way you did a little over a decade ago.
Jonathan, I'll close. First of all, my pleasure. And I'll close by saying that the way I think about every placement I've ever made, every move I've ever facilitated, it's almost like birthing a child, right? So I feel pride of ownership. I feel proud when I see how well you've done, that you're mentoring another, the next generation, that you're building this wonderful podcast. So kudos to you as well.
Thank you. Talk soon. Thanks for tuning in to another episode of Crazy Wealthy Podcast. Please follow or subscribe on your favorite podcast venues, or you can find us on crazywealthypodcast.com or fusionfamilywealth.com. Stay tuned to hear Amy's call-in for the recap of today's episode.
Hi, hon.
Hello, how are you?
I'm good. Did you have a podcast today?
Yes, we did. We had a nice conversation with Mindy Diamond.
Wow, that's
Diamond
a blast
Consultants.
from the past.
Yes, Mindy was responsible for helping me figure out the best way to go independent when we started Fusion. So we revisited that a little bit and had a nice discussion overall.
Where's her business today?
So she's doing great. She has Howard, her husband, is the general counsel, so it's because it's morphed into a family business. And she has both sons also in the business, Lewis and Jason, and we talked a little bit about how to manage that kind of a family business dynamic and make sure everything continues moving forward in the right way.
That's got to be one of the hardest things, is how to blend your family and the business together, and how not to fight at the Passover table.
No, it's true. But what was interesting was when we talk about how she started the business. So she, like me, was an accountant, and like me, knew that wasn't her passion, putting it lightly. So she decided to go into recruiting, and she was recruiting for the accounting profession. And what she was telling me is how it was very transactional, much like the early days in the brokerage business were transactional, selling things for commissions, regardless of whether or not they made sense for people, 30, 40 years ago. So she was doing the same thing she described, where she would call up an accountant with an opportunity and let them know, regardless of knowing whether or not it was right for them, how wonderful the opportunity was, and then making it fit, making sure that they saw how wonderful an opportunity was and hoping that they would transact with her. And then she learned that wasn't the right way, and she actually pioneered in the wealth management industry the consultative approach to recruiting, where she would call up and say, hey, tell me about your current position. What is it that you most like? What are the biggest challenges? And if you were to move, what are the things you'd be most looking to accomplish in a move? And only then she would come to them with opportunities. So she really, as she described, it was a pioneer in that space.
So she really became almost like a psychologist to people also, because she had to find out what fit their needs rather than try and take a square peg and put it in a round hole.
Right. No, and very, very. I saw a lot of similarities. Like when I asked her about what she attributes the big migration from brokerage firms to becoming independent operators, what she said is it's incongruence. The way she described that is, she said to me, you used to work for one of the big firms before you went independent, and they might have asked you to sell a certain product, and they might have said during downturns you can't keep the same staff and hire people and so forth. And so that incongruence led people to really want to be doing things independently without all of those restraints. And so it really hit home, because that was definitely in large part why we decided to go independent.
So on another note, do you remember when we ran into Mindy Diamond not long after she placed you?
Sure, we were in Hawaii and we met her family.
And I remember the conversation went like this. We were sitting on lounge chairs. You were probably yelling at one of our children. And she said out of nowhere, I know that voice. And there she was.
No, it's true. It's true. So in any event, I thought it was a good podcast, a good discussion, a lot of similarities between what I do, being very consultative and based on human behavior and so forth. And so all in all, I thought it was a worthwhile podcast.
That's great. That's great. So what's your next step? What's the next podcast going to be about?
Next podcast is going to be with Cheryl Penny from Dynasty Financial Advisors, whom I met through Mindy when we were looking to go independent. And so we'll be following up with Cheryl and his story and how he's helped in large part the move to independence as a thought leader in that space.
Sounds like it was a great day.
It was a good day. All right, thanks for calling in, honey. I'm glad you are still interested in learning about our podcast.
Of course, I'm always looking to learn something new every single day.
All right.
Have a great day, hon.
You too.
Bye.
Bye.
Thank you for tuning in to another episode of the Crazy Wealthy Podcast. For more insights, resources, and to sign up for our newsletter, visit crazywealthypodcast.com. Until then, stay crazy wealthy.
The previous podcast by Fusion Family Wealth, LLC, Fusion, was intended for general information purposes only. No portion of the podcast serves as the receipt of or as a substitute for personalized investment advice from Fusion or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation. Neither Fusion's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Fusion is engaged or continues to be engaged to provide investment advisory services. Fusion is neither a law firm nor accounting firm, and no portion of its services should be construed as legal or accounting advice. No portion of the video content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Fusion is engaged or continues to be engaged to provide investment advisory services. A copy of Fusion's current written disclosure brochure discussing our advisory services and fees is available upon request or at www.fusionfamilywealth.com.